If you're 65 or older, you're going to want to listen up. There is a brand new tax deduction out there that's designed specifically for seniors. And frankly, you need to know about it. We're going to break down what it is, who gets it, and most importantly, how to make it work for you. So let's just dive right in.
Okay, the number to remember here is $6,000. That's right. That is the maximum bonus deduction available per person. This is money that could directly lower your taxable income.
And just to be clear, this isn't some minor tweak to an old rule. No. This is a totally new tax break created from the ground up for people 65 and over. It was passed as part of a big piece of legislation called the One Big Beautiful Bill Act, or OBBA for short.
Now here's the kicker. This awesome deduction, it isn't going to be around forever. It's only available for a very limited time. So the real question is, do you know how to use it before it's gone?
So here's our game plan. We're going to cover what this bonus is, then we'll run through a super simple eligibility checklist. I'll show you exactly where to find free expert help, then we'll talk about a really powerful use it or lose it strategy, and we'll wrap up with a deadline you can't afford to miss.
All right, first things first. What in the world is this new senior tax bonus?
So, the official name is the Enhanced Deduction for Seniors. It came out of that OBBBA law and gives you an extra deduction of up to $6,000 per person. But pay close attention to those dates. It's only good for tax years 2025 through 2028. That's it.
Now this is where it gets really interesting. This new bonus doesn't replace anything. It literally stacks right on top of the deductions you're probably already taking. So let's say you're a single filer over 65. You get your regular standard deduction plus the extra bit for being over 65, and now you can pile on this new $6,000 bonus. I mean, look at that. You could end up shielding over $24,000 of income from taxes. That's huge. So that brings us to the million-dollar question, right? Do you qualify for this? Let's find out.
We've boiled it down into a super simple 3-step checklist. It all comes down to your age, your income, and a few specific rules about how you file. Okay, let's get into the fine print because the details really matter here. First, you have to be 65 by December 31st of the tax year, and you need a valid Social Security number. Now listen closely to this next one. If you're married, you must file a joint return. I'll say that again. You must file jointly. If you file separately, neither of you can claim it. But here's some great news. It doesn't matter if you itemize your deductions or take the standard deduction. You can get this either way. And the final piece of the puzzle is your income. You can claim the full $6,000 if your modified adjusted gross income, or MAGI, is under $75,000 for a single person or $150,000 if you're filing jointly. Once you go over those numbers, the deduction starts to shrink, and as you can see, it eventually goes away completely once you hit those higher income levels.
Look, I get it. A new tax law can feel a little, well, intimidating. But the great news is you are absolutely not alone in this. There are some amazing free resources out there.
You know, even the IRS knows this stuff can be complicated. That's why they actually sponsor several programs with trained volunteers who offer free expert tax help, and they specialize in helping seniors.
So here are the big 3 you should know about. There's tax counseling for the elderly, or TCE, which is fantastic for questions about pensions and retirement. Then there's VITA, which helps a broader group, including seniors. And of course, there's the AARP Foundation Tax Aid Program, which has locations all over the place, like in community centers and libraries.
Okay, so now you know how to claim it. Let's shift gears and talk strategy. Because this is about so much more than just saving a little money on this year's tax bill. This is a rare chance to really improve your entire financial situation. I absolutely love this quote from Hayden Adams over at Schwab. It just hits the nail on the head. You've got to reframe how you see this deduction. It's not just a discount, it's a tool. So the question isn't just how much can I save, it's what can I do with this? And one of the most powerful things you can do involves something called a Roth IRA conversion. So what is that? Well, simply put, it's when you move money from a traditional pre-tax IRA over to a Roth IRA. The only problem is, when you do that, it normally creates taxable income for you that year.
But this is where the magic happens. Look at how perfectly this lines up. Step 1, you convert $6,000 to a Roth. Step 2, that creates $6,000 of taxable income. Step 3, that new $6,000 senior deduction comes in and completely wipes that income out. What's the result? You just moved $6,000 into an account where it can grow and be taken out completely tax-free down the road, and you did it all without paying a single extra penny in taxes. It's brilliant.
And hey, The Roth conversion isn't the only trick up your sleeve. You could use this deduction to sell some stocks that have gone up in value. You could realize up to $6,000 in capital gains without a tax hit, which is a great way to rebalance your portfolio. Or you could just use it to lower your overall income and maybe, just maybe, keep yourself in a lower tax bracket.
And that brings us to our final, and honestly, our most urgent point. All of these incredible strategies, they're only possible because we have a very special and very temporary window of opportunity.
Let me be crystal clear here. This deduction is temporary. It has an expiration date. And what that means is to really make the most of it, you can't just be thinking about this year's taxes. You've got to be thinking ahead for the next 4 years. This timeline right here tells the whole story, loud and clear. You've got 2025, 26, 27, and 28. 4 years to take advantage of this. But in 2029, poof, it's gone, unless Congress decides to extend it. The clock is officially ticking.
So what do you do now? Let's boil it all down. First, confirm you're eligible with that 3-step checklist. Second, go get some free expert help to make sure you're doing it right. Third, start thinking strategically about how you want to use this deduction. And finally, make a plan and act before this thing is gone for good.
You know, this really is a rare financial advantage. By understanding the rules and thinking just a few steps ahead, you can turn a temporary tax break into a really long-lasting benefit for yourself. So, the only question left is, how are you going to use it?